Wondering what expenses you can claim in your tax return? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And one question we get asked all the time from the self-employed is, can I have a list of expenses that I'm allowed to claim for against my tax bill? Now, that's a really difficult question. And I know when I first came into the industry, I just presumed there was this rule book. And you can see there's about 22,000 pages of tax law for the UK behind me. You'd suspect there would be this big, long list of stuff that you could claim. Unfortunately, there isn't one, but in this video, I'm going to try and give you some of the major things and the normal kind of stuff that you see on a regular basis as a sole trader. Now, while quite a lot of what I'm going to talk about is applicable to a limited company, this is designed specifically for sole traders, and the rules are quite different in some cases. You know, a lot of the stuff is very common for both, but how you treat them and how you can, and sometimes just whether you're allowed them against your tax bill will vary depending. So this video is all about sole traders. But before we get into it, if you like these type of videos, make sure to click the subscribe button below and the bell so you get notified whenever we release more videos just like this one. So let's talk about it. So I said there's no list. However, there are some general rules. As you would expect with this many pages of tax law, there is of course going to be some rules, and the key one is that any expenditure you have in your business needs to be wholly and exclusively for your business. I mean, there's a bit of a longer bit about vocation and profession and all this kind of stuff, but let's just say it needs to be wholly and exclusively is the key word. And what this has meant is over the years, as sort of cases have gone through the tax courts, more and more of this has been fleshed out in specific instances because it can be a very blurred line. What you think is wholly and exclusively and what somebody else says can be a little bit different. So I'm going to cover a couple of key examples during this, but let's have a look at kind of the general feel then. Now, there is a HMRC manual, there's a big manual in fact, and I've put the link down below in terms of the detail of what wholly and exclusively means and some examples, but you know, if you want a bit of a bedtime read, that's all there, but I'm going to give you some examples in this video. So let's have a look at the normal type of stuff as a sole trader you might come across. Now there's standard obvious stuff, you know, advertising for your business, you know, that's a cost. Fine, you're going to come up against stationery, software costs, all these kind of things, rent if you're going to rent, and forget your home for a minute, there is some allowances and there's some other videos on how you can use your home cost in your house, but that side, if you were just renting a premises, is very straightforward. You know, the rent for that premises for your business is going to be allowable. Business insurance, for example, is going to be allowable. So those are general types. You're also going to have things like wages. So forget your wages, what you would term as your wages. They're known in the sort of self-employed world as drawings. They're the money that you take from your profits to you. So you don't count them as wages. But if you were to run a payroll system and pay somebody to work with you, say you took on an apprentice or one of these Kickstarters, as we're recording this video, is quite popular at the moment under that scheme, then if you're running those wages through a payroll system, then they're going to be deductible as wages. You might pay subcontractors or other freelancers. They're generally going to be fine. Again, presuming the work they're doing is directly for you and your business and it's not got some other bizarre thing like, you know, I don't know, you provide cleaners and one of them's giving you a bill for cleaning in your nan's house or something, then obviously it's not going to be deductible, but again, wholly and exclusively for your business, those kind of things. And then you've got things like finance type stuff. So we've got bank charges, interest you might incur on that business bank account. And then you know, loan interest, if you're taking a business loan for business reasons, you might find that that's deductible. That's where it starts to get a little bit complex. Obvious other ones, accountancy, generally your accountancy for preparing your business accounts and the like is going to be deductible against your tax bill, which is great. And then you start to get into the more complex areas. And some of these have got videos in their own right, but if you'd like to read that particularly, we have a startup guide on our website. Just stick in Google Startup Guide, Heelan Associates, and you'll see there's a sole trader guide there. And we go into a little bit more depth about things like using your home, the allowances for how you calculate using your home for business. There's a sort of a fixed version of doing it, and there's another way you can figure out what those costs are going to be. There's the same with your car, or you know, what business journeys can you claim? You can generally do it two ways. You can either do like a mileage log for business journeys, or you can put all the costs in and work out a way to kind of say this is the business bit of that total cost. And again, more videos in more detail, but you've got a couple of options, but that will generally be allowable in some sort of sense. And as a sole trader, it's actually a little bit more flexible in that sense than it is with a limited company. There's more issues to take on with a limited company with vehicles, but sole traders is actually quite nice. You've generally got two options and it's just which one you choose for whichever is going to be better for you really. So that's there. And then where it starts to get, again, more complicated is we've got things like uniform. So uniform is generally deductible. Now you need to be careful because you might class this shirt and trousers as uniform or wear it every day. Now, I did say to you at the beginning, there are some odd ones, because you could argue, well, this is wholly and exclusively for the use of business. I wear it every day. Okay, not every day. There's a few of them, but every week. This doesn't go out and go out partying with this on, honestly. So it's wholly and exclusively for business. However, what the tax courts have established over time is that because it protects my modesty, it's actually got a dual purpose. So therefore, it's not wholly and exclusively for the use of business. Now, it's an odd one, because in other circumstances, I'm sure some of the things I've just spoke about there, you could argue the same, but it just comes down to what's gone through the tax courts a lot of the time. So general workwear, for that reason, is disallowable. And if you're ever bored, there's a brilliant case in the courts where it was a lady barrister who wanted a suit. That's where the sort of the leading court case is on this, and wasn't allowed her suit because of what the reasons we just said, but was allowed the wig that they have in courts, because that's costume, and costume's okay. So there you go. You can see there's quite a fine line between some of these things, and that's where accountants can tend to have their specialty if they're good, is because they'll be up to date with the latest tax laws and know what you can and can't do. It's a little bit like sometimes you might have cosmetic work or medical work and things done to you as an individual, and because of the special nature of your job, it's okay. There was a great case with a stuntman, and we have a Hollywood stuntman on our books, so for us it was a really interesting case, and you were able to look at, okay, well in this instance the courts allowed them this, even though obviously work on you as a person is going to have some personal benefits. So it really is dependent, but you do start to get into some real detailed ones. But as a standard list, as I say, you're looking at those kind of things that I've mentioned. And then you've got a couple of other ones I think are worth talking about, in that one is business entertainment. So this is a favourite of mine, because you hear people when you're out and about in the world and they say, don't worry, the company's getting this or the business is getting this. And that's great. But where a sole trader is concerned, you entertaining your clients or customers, fine, of course you can physically pay for that, and that's part of everyday life a lot of the time in the business world, getting the coffees in or taking someone for lunch. However, it's not actually tax deductible against your business, so there's no tax advantage to doing that. So just bear that in mind. That's fine, but it's a weird one, no tax relief. And then you look at some of the bigger stuff. So if you're buying big computers and you're buying vans, I say big computers, if you're buying a computer, you're buying a van, things that are going to last generally more than a year and are of some sort of value. So we're not normally talking about like a chair for your office, but you might do if it's a particularly expensive chair, but generally think, they call them plant and machinery, but big bits of equipment like a new MacBook's the example I always use, a couple of grand probably if you get the decent one, and that's going to last. There's a set of rules called capital allowances, and I don't want to go too deep into this here, but just know that you put the figures in different places on the tax return, but the tax result generally is going to be the same. You're going to get a tax deduction. It's going to be an allowable expense. So you're looking for those, but also things like little hand tools, screwdrivers and the rest of it. If you're a tradesman, of course, those kind of bits of equipment are going to be deductible, as is all of the materials that you're buying to then fit into your customer's house. If you fit a kitchen for someone and you bought the kitchen, then the kitchen, of course, you're not going to get taxed on the money you've had in to kind of pay for the kitchen. It's the difference. So thinking back to normal kind of rules and principles, if you've earned £25,000 in the year and all of your expenses add up to £5,000, you're only paying tax on the £20,000. So all these expenses are making up that 5,000 in that example, and you're only taxed on the difference. So, and of course, the best way to make sure that you get those tax deductions, and if you've ever heard me talk about this, you'll know I always come back to this one, is keep good records. So whether that's a spreadsheet, whether it's some accounting software, and you can see various videos we've done in the past on whether it's a good idea to do either of those and what the sort of pitfalls are with both, and also the pros. There's some great pros for both as well. Then keeping those good records is going to help you fill out your tax return, and that's the important thing, is because ultimately how you claim these things against your tax is there's just a box in the tax return. And if your income's under 85,000, quite often there's actually only one or two boxes on the tax return you're actually going to fill this in. But obviously there could be a lot of figures on your spreadsheet if you're using a spreadsheet or your accounting software, a big long list of stuff, but it ends up getting condensed into a small figure. So, but those little records are going to help you. It's very easy to pay for something throughout the year and forget. Wait a year to go and do your tax return and then be like, oh, when did I spend some money? I swear I went into B&Q and bought that screwdriver set. Like, all those things are really, really important. So keep good records. That's going to help you, and then you're going to enter it in your tax return, and that's kind of how you claim. When people say, how do you claim it against your tax bill? Well, it's simple as that. You're going to put the money you've had in for your business in one box, and to kind of offset that, you're going to put your expenses in another box. And that gives you some idea then of the types of things you're looking for. Sorry, there's not a list. I really wish there was. It would make everybody's life easier. I suppose it would probably make us somewhat more obsolete if that was the case. But currently, yeah, wholly and exclusively for the use of business. And if you've got any specific concerns, stick it in the channel. Quite often we would have done a video or at least a blog on it, and you can start to get a feel for some of the complexities that are out there with sole trader expenses. But if you think wholly and exclusively, you won't go far wrong. Please do share this with anybody you think would benefit, and we'll see you in the next one.